Joining me now is Matt Miskin, the co-chief investment strategist at John Hancock. Matt, do you want to pick up on what Adam just said there? Those kind of in the theory of all this, trying to figure out, I mean, the market in general has held up pretty well, but with each passing week, the tone has gotten a little bit worse.
Yeah, and at the top of the market, Kelly, it's, the AI trade may be dead, but long live AI. Heard it before. It was a great newsletter headline there. But what we're seeing is basically the heavyweights of the market, which made up 40% of the market, it was really concentrated, are struggling to find new highs. And the Mag 7 continue to struggle. We like mid-cap and quality value. Things like healthcare, things like utilities, and even industrials as we go down in market cap. We're looking for high ROE companies. But the old days of finding dividends and equity income are gone. The dividend yield on the S&P 500 is 1.2%, which is the lowest in history outside of 2000. There's just not a lot of dividend yield. So what you got to do is you got to find quality stocks trading at a reasonable valuation. We like high quality value stocks here to wait out some of this volatility.
So what has changed? Are they just collapsing on themselves, the momentum names?
Yeah, so they got frothy. I mean, some of these got to a 600 PE ratio, and we're just trading at unbelievably frothy levels. And what you're seeing is the momentum trades, they're like locusts. They go all over the world, and they just pick up on the new hot trade. Be better than momentum. It's like be better than the gap. And the momentum factor, just because a stock is up recently, isn't enough of a thesis. We really want to focus on the fundamentals, focus on value here. And we're seeing a massive rotation in markets. So pick up some of that in that rotation. But momentum by itself can whipsaw fast. And as soon as it gets any kind of sniffing out of that rotation, it can fall really hard.
So it's easier when we're talking about kind of the small cap, low earning momentum names to say, okay, sure. What about as we get way up there? What as we talk about Mag 7, software names, real companies with real earnings? How do you know if they're part of this momentum play or not?
We actually think that those had the fundamentals to back it up. I mean, you look at the earnings season. Q4 earnings season was awesome. 18% earnings growth, and basically we put on a bow on it yesterday with NVIDIA reporting, but 18% earnings growth. Wow. I mean, if you had told me that in retrospect, that it's 4 percentage points above where analysts had thought it was going to be at the beginning of the quarter.
That's really high.
The market is giving it no love. And the reason why is because of this macro headwinds, because of these headline risks. But we actually still see quality on sale, if anything, because it's not responding to the better earnings. So we want to actually sniff out some of these higher quality stocks that are not getting the love right now, redeploy capital to them. Again, a little bit of a value tilt in there, but to not get kind of pushed away into other high flyers that you mentioned.
And as you said, you like healthcare, utilities. I mean, obviously you have to be a little careful with some of the AI names there. But I guess my last question, Matt, would be, did the market do so well last year because it was pricing in 18% earnings growth in Q4? And is the skid now telling us that we're not going to stack up this year?
Yeah, we went back-to-back 25% gains. That historically does not happen often. It's only happened 4 times. The only time that you got a third year in a row that was above 20% was 1999. So you've got to really see a frothy extension here of kind of that momentum, low-quality rally. We're starting to see that come off. We want to set expectations on equities that you might not be getting such great returns you have been. But if you're looking for some defense and a bit of dividends, we would tilt more value. It's going to help with protection on the downside. And you just got to be patient here because we just got to reset a bit. And we think we can actually find further gains as time goes on.